As always, thanks for checking out the videos from Netpicks. And today I'm going to do a quick little walkthrough of some recent market action. Looking back at the momentum indicator video that I put together a while ago, I know a lot of you enjoyed watching this, so having a walkthrough is always a good idea. And if you haven't checked out this momentum indicator video, the link is above, and you can check out this video before watching this one. Now I'm going to use a range of markets on a range of time frames, and I'm going to start on crude oil, and this is a 15-minute chart, day traders kind of chart. And down below we have the histogram version, or really the column version, of the momentum indicator, and the momentum indicator is set to 10. Okay, just so you can see that. This black line is a 20-period exponential moving average. We're going to use it for a rough estimation of the trend direction, more slope than anything else. So in the other video, I talked about using momentum to gauge whether a pullback is worth trading. I also touched on divergence. So let's take a look. You can see the market's going down here off this sloppy little price action here. We have a low here, price does break through. First thing we want to look at is, can we trade any pullbacks in the direction of the 20-period moving average, which was our trend direction indicator. And as you can see, we did put a momentum low in. So we would want to trade the first pullback after that happens. And how you do it, how you trade your pullbacks, it's entirely up to you. There are many ways that you can do it. Not everything is complex in trading. And so if you take a look at how we traded it here, we just look for a pullback in the area of the 20-period moving average. And later on in the video, I'll show you one way you can more or less be more objective with how far it comes in. You can see a price pulls back up to an area that was once support. It's acting as resistance now. Whatever you use to trigger yourself into a trade, it could simply be a takeout of this candlestick here that happens here. It can be a 3-bar pattern. There's different ways you can do it. Basically what this one would be is we have a move up. The high of the first candle is taken out by the second candle. The third candle comes back in and closes below the close of this candle here. You could also use trend line triggers if you want. How you're going to draw them when you get markets like that, it's up to you. A break could be your entry as well. There's nothing magical about an entry, regardless of what you read and the amount of money you're going to spend on, magical indicators. There just isn't. You could actually look just down here at your momentum indicator, and then when you see a drop in momentum, you can use that for an entry. So you'd be entering on this candlestick right there. It's entirely up to you how you do it. The most important thing is that you manage your trade and you get out if a trade's going against you. Price moves down. We put in a low. We put in this low right here. Price puts in another low, but our momentum indicator puts in a higher low. We're going to consider that to be divergence. If you're interested in jumping counter trend early, that's something you might want to consider. Again, you need some sort of trigger into the trade. Different ways you can do it. Again, we could use a trend line coming down like this, a break above, a close above, whatever. You decide to enter the trade. Just put in your stops and your targets, know where you're getting out. We could also look at this low here. Price makes the low, pulls back, crashes through. You could actually put a buy stop order above the candlestick high. That broke that. It's more of a 2B reversal. And when you do that, our stop is pretty much in this area right here. So you already know your risk is pretty much defined on that trade. We have our moving average starting to point to the upside. We put in new momentum highs. A nice pullback into the area of the 20-period moving average. In this case, we just happened to pull back into a range that was formed over here. Again, however you want to get into the trades, it's up to you. You could certainly use the momentum indicator, which would get you in on this trade this candlestick right here. You could use, it doesn't matter, just find your own trade entry. Over here, we do not put in a momentum high, although we do put in a slightly higher high in price. So right away, you're probably discounting this trade as a pullback trade. And one way pullbacks fail is they fail into a range such as this. There are a couple of ways that you can say a pullback has failed, and we're going to touch on one later on. This would be a range trade, so you would use your range trading strategies. For me, I like to see price basing near the highs up in this area right here. So this is not necessarily a trade I would have been able to get into using my rules. Even having price spike down below here, coming down here, and then immediately being bought back up could be a trade entry with a defined stop right there. That one's pretty simple. Wasn't too complicated. They're not always going to be this easy, of course. We're just, again, to keep it simple, we're using the momentum to identify a pullback trade. And how we do that is the leg that precedes the pullback, is there momentum in it? If there's not, it's not a trade we want to take. So the next one we're going to look at is the pound US, and for that we're going to drop down to a 4-hour chart, which is a time frame a lot of traders like to trade for swing trading, even though time does not really define what a swing trade really is. So this is a great example of a pullback that starts to set up pretty nice, but then we have a failure. So you can see we make momentum highs, nice move up into the highs, and so far we've got a nice pullback here. This gap could just be in my data as well. Well, it's not. You can see it's the different dates. It goes from the 31st of January to the 2nd, so there's a gap. This is the issue we have. We don't want to see this kind of action into a pullback. And you see it just keeps on crashing down. Remember, these are 4-hour candlesticks. So this was a pretty big drop. And price just happened to pull back into this area that was acting as support. And understanding structure such as that and some price actions, some simple patterns will serve you well. You can see that price stops, pokes down, and starts to rally. The key that we're looking on for this trade would be down in this area right there. You can see the orange lines. It's a momentum low compared to this one. So we want to trade this pullback. Then we get this strong momentum candlestick, which is immediately reversed. This is not a trade you'd want to skip. How you get into this trade is, again, I'm going to keep on harping at it. There's no perfect entry. You might wait for a loss of momentum to take your trade. You might consider some sort of trend line break. Now, trend lines hold no magic. Just so you know, they don't act as support and resistance or anything. What it does help measure is more of a rhythm in the price movements. There's nothing magical about these. Price drops down here, put in a low. It's more or less bases. Some people would call this a pullback. Not really. But then we get a higher momentum reading on a lower low. Right away, you should be thinking, okay, well, maybe we're looking at a bullish divergence trade here. Well, if we are, how are you going to get into it? We know that if the downtrend is going to continue, we got to have this low taken out. So we know we could use that for a stop. Slightly below that, around this area right here. We could look at price that breaks above an area that acted as support here and could have been potential resistance. It's not. Your trade could be an entry when a break of that. You could use some sort of trend line. Again, this one would be tough because you would have to drop down to lower time frames if you want to get into this area right here. But my trend line drawing rules are pretty basic. As long as I am connecting the last high into the lowest low, to me that's my valid trend line. I can be objective when I draw them. And you can see if you did happen to take that trade to the upside, you've been rewarded with some profits. We're going to look at Costco, a stock, some crappy price action into here. But again, we can still use our momentum indicator to decide if we're going to get a trade or not. This is just a normal trend line, just drawing it from the lows. I was actually connecting it up to this area. This had not happened if you're looking at this one. Momentum highs, we have a pullback into this area right here, which just happens to coincide with a previous resistance area. That would be a trade you might want to take, right? Using your tools and tactics to get into trades. But price stops making new highs. So as a trader, how you manage your trade is entirely up to you. Some traders would start peeling off some, and then when price does not break below this area right here, they'd feel better about the trade. New high, price pulls back. We got some strength into here. Now here's the thing. When you get strength, we don't know that's the end of the move. But we can see when this candle shows up, it's the end of the move. We could look at that as an exhaustion thrust. It might not necessarily be anything that we've got a total trend change going on. When they're at the end of moves, which we only know when the move ends, we can say that is an exhaustion thrust because it did not continue to the downside, as you can see by this candlestick right here. How you get into this trade? Look for a momentum to do that. Tick up. You would have gone long at about 308, and right now the price would be 316. But here's the thing, we got to keep our eye on it. If we're considering using momentum for pullbacks, we've got that high, we got this high. We got this higher high, we got a lower high. That's something you might want to consider as well. If you bought, are you out? Are you taking your money and running? Or did you peel some off? Or did you adjust your trade? There's different ways you can manage that. But again, it's just using the momentum indicator to validate or to qualify a price movement that you may want to get into when it pulls back. And also keep in mind, this is coming into earnings as well on Costco, which could account for this choppy type of price action. And the last one we're going to take a look at is Bitcoin, which has surprisingly and pretty quietly hit the over $10,000 mark again. So let's take a look at it. Price is moving down. We put in this low here. We have a lower low in the momentum. We pull back into here. We put in a lower low in price, higher low in momentum. And you can see that this is just rockish to the upside here, bases and goes up. So the question is, would you be on alert for this? Well, yeah. We have a bullish divergence here. We have price momentum up, basing at momentum highs. You can see where the range forms. So you can actually front run this whole move up and bought in this area right here. Of course, that's hindsight because I'm looking at the chart right now. So how could you enter this trade? Well, again, we have our range. I talked earlier about the pokes down below the support and immediately buy back. That's it right there. You can see it as clear as day. Right there. These are called springs in more of a Wyckoff terminology. Not a bad way to enter trades. We could also consider we got a high, lower high, a break above is your trade entry. Stop location would obviously be entirely up to you. Using ATR stops is a great idea. I'm a fan of those. Momentum high, we have a pullback into our 20-period moving average. Getting into it again, it depends on your trade style, how you enter it. There's different ways to enter. We have a little minor support area right here. Price breaks through. price is regained, you could either, there's two ways to enter that. We could either place a buy stop above this candlestick that broke below the support level, or we could simply buy when price closes above it, and this is obviously pretty bearish. Or again, we could just look for the momentum to start upticking, and you'd still be on this candle right here, the close of it. And it's 86. And I did say we would look at a different way to measure and be more objective with a pullback. I'm going to pop on this Keltner channel, and I've taken off the high band, the low band, the basis, the baseline in the middle, as you can see right here. Using the background only, and I'm using a half of an ATR, and this is a 20 period exponential moving average. So you could say to yourself, I need price after momentum high or momentum low for shorts. I need price to pull back into the blue area. It's that simple. It doesn't get more complicated than that. Because what we're doing, if we're considering 20 period as our trend direction and 20 period for a Keltner, we're looking at an average price of the last 20 periods, whatever that would be. And we're looking for price to come within 0.5 of an ATR over the last 20 periods. You could obviously adjust that. And you can see what get you in this trade. It's ranging right in there. So when we talk about a return to value, that's what we're kind of seeing right here. These all would be legitimate trades. Let's take a look over the 4-hour chart here. Again, legit if you're looking to short here. Let's go back to the daily chart of Costco. Legitimate. So you wouldn't have been able to buy this one. So having that little filter of what is close for you saves you this. And then let's go to Bitcoin, as we just were. And that's it. So that's that. You know, it's a simple approach. Simple does not mean useless. We don't need things to be complex in order to be useful. And we're just using two things that the market is known for: moving with momentum and pulling back or rallying, depending how you want to go short or go long. We're using momentum and the natural waves of price. That's it. Nothing special. At the end of the day, know how you're entering the trade, know what your stop is, know what setups you're looking for, write them out, make your trading plan, stick to it. That's that. So if you like this video, I'd really appreciate you giving me a thumbs up down there. Subscribe to our channel. I've got a lot of great feedback about these more off-the-cuff type of trading videos as opposed to the well-scripted other ones. Thanks for watching.